What's going on? Welcome back to the channel. Today we're going to talk to you about SoFi. I want to go over some of the data points, break it down on what really caused this crazy day, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So SoFi went down 2.8%, 26.55 the low, 27.95 the high, and 75.7 million shares being traded. When it came down to why SoFi and the broader market went down today, it was rather comical. So a lot of fear from last week did roll over into this week. And a lot of that is just being done through algorithmic trading, regrettably. But there was one data point. And so today wasn't even that big of a deal for data points. It's kind of in the later part of the week. That's where the market generally will care about. But we did have New York Empire State Manufacturing Index. Even though 9 times out of 10, we don't really care about that. It kind of comes in line with the forecast. Today seemed to have been something different. So it came in at 18.7, and it looks as though right now the market does not like any extreme surprises. And this was a very extreme surprise, a positive one. So came in at 18.7, previous was 10.7, forecast was 7. So we were anticipating for it to kind of go down, and generally that's what the market would have really wanted to somewhat justify a little bit more of a rate cut, because the likelihood of a cut, especially tail into last week, got hit quite hard. But this being positive, that did really hit that likelihood even more, because again, why do you need a rate cut if we're expanding at this rate? That is insane. So right now, because of that, this did go down to 39.9%. So right now for the upcoming December 10th meeting, we're having pretty much a likelihood of no cut. So right now there's about 60.1% likelihood of nothing. So that's not what the market wants. The market wants this to be the next big catalyst. And even aside from that, though, throughout the trading day, you kind of had a lot of geopolitical fears. You had Trump adding a certain level of uncertainty, saying that it looks like, I don't know, they're going to have boots on the ground in Venezuela. So nobody knows what the hell that does mean. And just, I think, given the circumstances of everything that's been happening, the market just wants one catalyst. And I think they were really focusing and hoping for this to be it, the rate cut. And now that's kind of slipping through our fingers, most likely for the January meeting. So that's, again, not necessarily the greatest. We do have the FOMC minutes coming out Wednesday afternoon, so that could be a little bit more of a saving grace, but still it was rather unfortunate. So you did have a lot of institutions kind of selling. At the same time, as I mentioned kind of last week, you might have just a lot of institutions selling for tax purposes or whatever else. So that could be also one attributing factor. No news from SoFi today. There was a couple 144s that just came out after hours. One was this. So Eric did sell about 23,000 shares. It was done today. And it was not for tax purposes. So it was just a straight up sell. You also did have a run, who is a officer, sold 25 or just over 25,000 shares, was done today. Again, not for tax purposes. So ever since SoFi's earnings, that kind of the whole blackout period was removed. So now insiders can freely sell. In my opinion, I know it might be unpopular opinion and possibly asking too much of management, but I feel, given the sentiment, if Anthony comes out and buys SoFi, or Chris or someone else, that goes to show that they see value at these prices. There's another stock I cover on another YouTube channel, and that is Opendoor. Even though that's very speculative, you did recently have the CEO and also chief, I think it's the growth officer, they bought stock, and it wasn't just chump change. It was like $1 million plus each. So generally that is good, right? They see value at that $8 range. If Anthony comes in and buys, I feel like that'd be pretty good, in my opinion. Again, that might be asking a little bit too much of Anthony, but still, it might help the sentiment a little bit. And on a side note, I don't believe Anthony's actually purchased any stock, transaction code P, in a very long time. On a side note, actually I can just pull this up right here just to give you a quick overview of that. So pulling up some of the insider transactions for SoFi, let's pull this up. So good old Anthony Noto. So if we kind of just look at only his transactions, so he's done obviously a lot of exercising and then just selling for tax purposes and selling just straight up sell. So that's the difference, right? Transaction code F is for tax purposes. Transaction code S is a sell. We're looking for transaction code P, meaning purchase. So last purchase, it looks like it was June 14th, 2024. So again, that was at the $6-7 range. So that would be a pretty good sentiment booster in my opinion. But again, might be too much to ask from Anthony. Aside from that, shorts did increase 68,000 shares. Nothing too significant, but 9.51% of the free floats being shorted. Works out to be 112.5 million shares overall being shorted. Cost to borrow minimum still negative. So you're seeing kind of a lot of brokers trying to drum up some business by kind of offering and paying people to short SoFi, but still, given this data points here, I don't really see anything significant to worry about, because as I've brought up time and time again, there's more than 10 million shares available to be shorted, and it is fairly cheap to short SoFi. So in general, if shorts really did feel like this was like the start of, let's say, a great recession or something along those lines, they would easily double down, triple down, but they're not. So in my opinion, I'm not really worried about kind of a lot of this artificially suppressed push lower, and it's rather comical if you think about it, but nonetheless, it doesn't feel comical at the time while we're in it. But 51 million in calls, 20 million in puts, so very low volume in comparison to the norm. So 71.4 million overall today. 46% of all the options being done were bearish in nature. From a bull standpoint, you see a consensus for it to be between that 28 to 29. So optimism has dropped a little bit because last week we were anticipating to be in like the $32 to $34 range. Bears are anticipating for it to be sub kind of 22 to 24. So they are anticipating a lot of fear, and I think some of that could come from potentially NVIDIA's earnings, FOMC minutes, as well as Walmart. So that's going to be Wednesday onwards. So just be prepared for a lot more volatility. These are some of the transactions that did occur on the secondary market, most of which were institutions selling, regrettably. But the big ones for today, 44.2, 11.2, 8 million, 7.5, 2 million, and so forth. On the dark pool, the big one was, it looks like 5.6 million, 3.5, 2.9, and so forth and so forth. So nothing really significant, no 100 million plus. So no institutions are really buying the dip, I guess. So maybe they're just watching and waiting. Aside from that though, with it at 27.04, it is trading currently between this pivot and this S1. So 26.66 is going to be a strong support. Just kind of watch for that going into tomorrow. And then dependent on if we see a even greater significant push lower, 25.20 will be a following one. For data points, just on a side note, we do have one early this morning, right, or in the morning before the bell, ADP employment. Last week, it again had more of an extreme move. Market freaked out, came in at negative 11,000. So that one's going to be another one to kind of watch for. That one's going to be the only one pretty much to watch, unless something larger geopolitically kind of pops up. But nonetheless, on the chart, as I mentioned on my weekend video, Monday was going to be a big day, because now this is 2 consecutive days for it to be below that 50-day moving average. So usually from a technical standpoint, it does mean that we might be having some further consolidation. Last time that did happen for 2 consecutive days below that 50-day moving average, it was back in February. So that's usually not necessarily the best, so it might signal some further consolidation. But one thing that I kind of don't really like about this recent push lower, a lot of it has been somewhat artificial. So it's hard to really trust all of this, especially when AI is really driving it lower. But nonetheless, from a technical standpoint, in theory, we could be seeing more of a 20 to 30% further push lower, based on at least it staying below that 50-day moving average. So just wanted to kind of throw that out there. Doesn't always happen all the time, but you never know. It could in theory. Aside from that, there wasn't any new analyst ratings, no real articles talking about SoFi, so it's just piggybacking off the broader market, as frustrating as that is sometimes. But let me know your thoughts on SoFi. Did you buy the dip? Did you sell? What have you been doing with SoFi? And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.